Hello and welcome to video lectures on IGNOU MBA course number 4, Accounting and Finance for Managers. Today we are going to see unit number 1 in the first block, which is Accounting Framework. Let's begin the chapter. Unit number 1, Accounting and its Functions. In this unit we will be studying nature and role of accounting, activities of an accounting, roles of accounting personnel, and the accounting function in an organization. This is the structure of this unit. There are 12 parts in this unit, like introduction, scope of accounting, emerging role of accounting, and many other parts are there. We will be seeing one by one. Introduction. Accounting is often called the language of business. The purpose of accounting is to communicate or report the results of business operations and its various aspects. The definition of the accounting goes like this: it is an art of recording, classifying, and summarizing transactions and events which are of financial character and interpreting the results thereof. See, the most important point we have to remember here is recording the transactions which are financial in nature, means those which are related to money. Only such transactions and events are recorded. Once they are recorded, it is classified, summarized, and reports will be generated. It's a very general level of definition of accounting. Now we'll see the scope of accounting. Means accounting covers which areas. What are the parts of accounting? The first one is data creation and collection. Generally, data is collected. Whatever data is collected is historic, which means all the events and transactions which have already taken place, such data is collected. So this is called historic data. After the historic data is collected, it is recorded in accordance with the generally accepted accounting theory. Recording data means, suppose someone purchases in a company, there is a purchase of goods. It has to be recorded as per the principles of accounting. Which account is to be debited, which account is to be credited. These things are given by the accounting theory. The recording and processing of information usually accounts for substantial part of total accounting work. We'll come to this diagram later because as we go on reading the scope of accounting, this diagram will be understood automatically. This type of activity of accounting may be called recordative accounting. The next area which accounting covers is data evaluation. Evaluation of data includes controlling the activities of business with the help of budgets and standard costs, evaluating the performance of business, analyzing the flow of funds, and analyzing the accounting information for decision making purposes by choosing among alternative courses of action. So the wordings, the sentences are very big here, but simply data evaluation means controlling the budgets and analyzing the activities, analyzing the information thereof. That's all. The next area is analytical and interpretative work. What is this analytical work? Means generating reports or giving answers to questions like capital project analysis, financial forecasts, budgetary projections, analysis for reorganization, takeovers, mergers. So all this comes under analysis, taking the records, evaluating, and then analyzing the future. That is analytical work. Data evaluation also has another dimension which is called as auditive work. This focuses on verification of transactions as they are entered in the books of accounts and also the financial statements. Data reporting consists of two parts, external and internal. External reporting refers to the communication of financial information about the business to outside parties like shareholders, government agencies, regulatory bodies of government, and many other stakeholders. Internal report is mainly concerned with giving the results of financial analysis and evaluation to the management for the purposes of decision making. Throughout this PDF, I have underlined, I have highlighted many parts because these are the answers which we have to write when any question is asked. Questions in the examination comes mostly from this PDF only, from this unit and from this information only. That is why I am particularly underlining these parts, and I am reading out as it is because we can write in the examination as it is. The central purpose of accounting is to make possible periodic matching of costs and revenues. Okay, let's go to the emerging role of accounting. So, emerging role of accounting means we will discuss about the evolution of accounting. There are four phases in the evolution of accounting: stewardship accounting, financial accounting, cost accounting, management accounting, social responsibility accounting, human resource accounting, inflation accounting. Not four phases, there are many different phases it seems here. Okay, let's see the first phase, stewardship accounting. In earlier times in history, wealthy people employed stewards. So what these people did was they have recorded that business transactions. So this activity is commonly known as bookkeeping. So from this activity, gradually what emerged was double entry bookkeeping system. Okay, this was the stewardship accounting. From this, what came? Financial accounting. Financial accounting dates from the development of large scale business and the advent of joint stock company. Joint stock companies is almost like a limited liability company. The liability of a shareholder for the financial debts of the company is limited to the amount he had agreed to pay on the shares he bought. He is not liable to make any further contribution in the event of company's failure or liquidation. Unlike a partnership, a limited liability company, the shareholder's debt is limited to their investment in the company. He is not responsible for the more than his investment if at all the company is failed. Next, the importance attached to financial accounting statements can be traced to the need of the society to mobilize savings and channel them into profitable investments. Why financial accounting has emerged means the society mobilized their savings and invested in the joint stock companies, and therefore they wanted to know the profitability of the company. They want to know whether their investment was good or not. This is the most significant social purpose of financial accounting. Cost accounting. The industrial revolution in England presented a challenge to the development of accounting as a tool of industrial management. Costing techniques were developed as guides to management actions. The increasing awareness on the part of entrepreneurs and industrial managers for using scientific principles of management in the wake of scientific management movement led to the development of cost accounting. Cost accounting is concerned with the application of costing principles, methods, and techniques for ascertaining the costs with a view to controlling them and assessing the profitability and efficiency of the enterprise. Once we have to read the statements here and then we have to summarize what is written there. Industrial revolution, industrial management, advances in management, and from these things scientific costing principles have emerged. That is the summary of this. Cost accounting means scientific principles in understanding and designing the costing of the company. Application of scientific principles to the costing, that is nothing but cost accounting. From there, from the industrial revolution and advanced management techniques came this costing account. Now what is this management accounting? The genesis of modern management with its emphasis on detailed information for decision making provide a tremendous impetus to the development of management accounting. Okay, management accounting is concerned with the preparation and presentation of accounting and controlling information in a form which assists management in the formulation of policies and in decision making on various matters connected with routine or non-routine operations of business enterprise. This is very simple. The sentences seem very big, but the summary is nothing but they wanted to control the information, control the company through their planning, their decision making, their budget making, all those things. For this, they wanted information. They get this information through the management accounting system. That's all. We can write in our own words. If we understand the synopsis of this matter, that is why I am reading the entire matter, whatever is written here. Once we understand the synopsis, we can write in the examination. I am doing this video exclusively for the purpose of IGNOU MBA examinations. This is IGNOU MBA is an open university. Anybody can apply for this who is having a minimum degree, and it is there will not be any classes for this one. Once you apply for a MBA, then they will send you books, you have to read the books on your own and go for the examination. So this is usually useful for working professionals. They do not have time to sit and study for many hours. That is why I'm reading out the statements whichever is given in this book. Okay, the next part is social responsibility accounting. How does this social responsibility accounting came? This came because of increasing social awareness and considering because of social awareness. As days passed on, social awareness increased. What it does is social responsibility accounting, it majorly looks at the social effects of the business decision in addition to the economic effects also. It also sees the dangers posed to the environment and ecology by the unbridled industrial growth. The management is being held responsible for what it contributes to social well-being and progress. Okay, the next part is human resource accounting. So what is written here? In 1964, the first attempt to include figures on human capital in the balance sheet was made by Herman Sun. So this name was later transformed as human resource. It involves accounting for investment in people and replacement costs, as well as accounting for the economic values of people to an organization. This is human resource accounting. All the explanation is very simple. We have to understand one or two points in each paragraph and we have to remember. We have to replicate the same in the examination. The next part is inflation accounting. This inflation accounting is majorly concerned with the value of the assets and profits in the light of changes in the price level. Means as we go on, as years increase, the rise of prices increases in an economy, that is called inflation. Now the value of the assets and profits in the balance sheet, assets in the balance sheet and profits in the income statement, they have to be reflecting the present prices. This requirement brought about this inflation accounting. In a way, it is concerned with the overcoming of limitations that arise in financial statements on account of the cost assumption and the assumption of a stable monetary unit. Accounting as an information system. Accounting as a social science can be viewed as an information system because it has all the essential parts which are required for an information system. What are all the parts? It has an input, it has a processing unit, it has an output. Input is what? It is the raw data, collection and recording of all the events. Processing, what is the processing? Men and equipment and accounting theory. What is the output? Reports and information like financial statements. What are the financial statements? Income statement or profit and loss account and balance sheet. These three inputs, processing and outputs can make an accounting system as an information system. There are several groups of people who have a stake in the business organization, like stakeholders are managers, shareholders, creditors, employees, customers. Additionally, the community at large has economic and social interest in the activities of such organizations. This interest is expressed at the national level by the concern of government in various aspects of the firm's activities, such as their economic well-being, their contribution to welfare, their part in the growth of national product, to mention only a few examples. Now we shall briefly discuss the information needs of various users. So above we have seen different stakeholders who are interested in the information about a business organization. Now one by one we will be covering why they are interested or what they are interested in. First one is the shareholders and investors. Obviously they are interested because they have invested their money in the business. They are interested in knowing periodically about the profitability of the enterprise, soundness of their investment and the growth aspects of the enterprise. Second one, creditors. Creditors simply means those who have lent money to the organization, to the business. Creditors may be short-term or long-term lenders. Short-term creditors include suppliers of materials, goods or services. Means short-term like 1 month, 2 months, 3 months. These are all short-term creditors. They are normally known as trade creditors. Long-term creditors are those who have lent money for a long period of time in the form of secured loans like commercial papers, bonds. their debt providers to the company. The main concern of the creditors is focused on the credit worthiness of the firm and its ability to meet its financial obligations. They are therefore concerned with the liquidity of the firms and its profitability and financial soundness. Simply, they wanted to know whether the company is solvent, whether there is liquidity, whether there is profitability in that company. They want, whenever they want the money, they can go to the company and ask, get their money. There should be liquidity in the company. That is their major concern. Now, employees, it is obvious all the employees are interested in the outputs or reports generated by the company, because their wages, their bonuses, their profits, all are linked to the reports. All they have an expectation that there will be a hike in their salaries if the reports are good. Government, it is also obvious, it is the responsibility of the government to direct the operation of the economic system in such a manner that it subserves the common good. Government agencies collect information about various aspects like levels of outputs, profits, investments, costs, and taxes. All this information is very important in evolving policies for managing the economy. Now, why management is interested in the reports of the company? Because they have to do the planning, organizing, and controlling the company. The emphasis on efficient and effective management of organizations has considerably extended the demand for accounting information. Okay, now who are the other persons now interested? Consumers and others. Consumers organizations, media, welfare organization, public at large are also interested. They are interested on what levels of profits and outputs are being achieved, in what way the social responsibility is being discharged, and in what manner the growth is being planned by the enterprise in accordance with the national priorities, as if it is their own company. Okay. Now, role and activities of an accounting. We'll see what an accountant does in a company. What he does. He is engaged in accounts keeping. There is no need of any explanation. He is a functionary who aids control. Who aids means who helps in the control of the management. He keeps the conscience of an organization. Keeps the conscience, a very big word, conscience of an organization. Means he sees that all the work is done as per the principles, accounting principles. There is no unethical data in the recording of events. Information management for internal and external use. Information management, it's almost like reporting for internal and external use. A fiscal advisor, like a tax advisor, tax planner, financial advisor. He produces an income statement and a balance sheet. Okay. He verifies, authenticates, and certifies, like an auditor. So these are the various roles and various activities an accountant does in an organization. You'll see here what it is given. Statement B is about, what is this statement B? Statement B is a functionary who aids control. Statement B is about the role which an accountant can play in the management control process. Management control process. It is concerned with attention directing and problem solving, most like a decision making. The functionary may be designated as management accountant, or a controller, as in the United States. An accountant who helps the management by attention directing and problem solving can be called as a controller or as a management accountant. To get more marks, we have to use these words like attention directing, problem solving, management accountant, controller. Okay, if you put these words in your examination paper, in your answer sheet, then you will get more marks. The video is oriented mainly towards examination, IGNOU MBA examination. This is not for knowledge purpose. If you want knowledge, you can go to the class, go to the university, you can study there. This video is exclusively for completing the MBA course. This is a distance education MBA. We want to pass the MBA at any cost. Okay. Now, statement C. Account keeps the conscience of an organization. What does it mean? Statement C presents the accountant as a conscience keeper. He is there to see to it that none of the staff of the organization carries on this work in an unethical way or in a manner prejudicial to the long-term legitimate interests of the firm. See, you have to underline words unethical and long-term legitimate interests. Whatever is against legitimate interests, whatever is unethical, that has to be pointed out by this accountant. Therefore, he is the conscience keeper. Next, often the role of accounting in small businesses is not properly recognized. It is widely known that a large number of small businesses fail and do not survive beyond a few years. One of the main reasons for their failure is that they do not have an adequate information system to help their managers to control costs, to forecast cash needs, and to plan for growth. Organizations which have poor accounting system often find it considerably difficult to obtain finance from banks and outside investors. This is very clear. Any organization which does not have adequate accounting systems often fails to get finance from outside investors and also from banks, and such companies or businesses fail to have a control over their business because they cannot forecast their costs, they cannot have a control over their costs and cannot forecast their needs, cash needs. They cannot plan their growth. That is why they fail. So there is no need to overemphasize the need for accounting. Next see, we will see the next part, accounting personnel. The accountants can be broadly divided into two categories: those who are in public practice and those who are in private employment. Public employment, private employment. Public accountants, private accountants. Okay. The accountants in public practice offer their services for for conducting financial and cost audit. Therefore, they are known as auditors. They are doing financial audit, they are doing cost audits. Therefore, they are called auditors. The auditor examines the books of account and reports on the balance sheet and profit and loss account of the company as to whether they give a true and fair view. Note this, true and fair view of the state of affairs of the company. Okay, and its profit also. The auditor in a company is appointed by the shareholders to whom he reports. This is very, very important. This happens mostly almost in all of the companies, including the public sector undertakings also. Public accountants are generally members of professional bodies like Institute of Chartered ICAI and also Institute of Cost and Work Accountants of India. In addition to conducting financial or cost audit, they may also provide consultancy services for designing or improving accounting and management control systems. Okay. Next, internal auditor. Who is this internal auditor? Internal auditor is responsible for performing monitoring activities and other services like designing and operating the system of internal controls, auditing the data which is reported to the directors of the company, and assisting external auditors. Internal audit includes continuous verification of entries appearing in the books of account with original vouchers. Further, it attempts to ensure that the policies and procedures regarding financial matters are being complied with. Internal auditing is also concerned with administering the system of internal check so that mistakes are prevented from taking place. Thus, the words used in these sentences are very much academic. We have to write as it is to score more marks. That is why I have underlined this paragraph. Internal auditor devotes his entire time and energy to the needs of one company, that is one employer, whereas an external auditor serves many clients. The primary function of the external auditor is to safeguard the interests of the shareholders by an independent and impartial appraisal of the financial transactions of the company so that he could report on the net profit earned by the company and its financial position. His role is of an objective outsider, expressing expert opinions to the financial condition and operating results of the client's business. Apart from shareholders, other parties such as banks, lending institutions, government agencies, also rely on the fairness of such financial reports in making certain decision about a given company. An auditor is bound by a set of professional regulations which include an examination on technical competence and adherence to a code of ethical conduct. Who is the controller? The next part is controller. The above paragraphs are very important. This is all about internal auditing and external auditing, the role of an internal auditor, the activities of an internal auditor, the role of an external auditor, the activities of an external auditor, what he does. These are the summary, these are the points which are given in this textbook, and we have to write the bullet points in the examination. Okay. Now the next one is controller. Who is this controller? Controller, the other name is chief accountant. He is usually the head of the whole area of accounting, including the internal audit. He is the overall in charge of all the activities like financial accounting, cost accounting, management accounting, tax accounting, and also various other kinds of accounting. He exercises authority both for accounting within the organization and for external reporting. The external reports include reports to government. Okay, reports to government. Exercising authority, what it does, it's a very general statement, there's no meaning to it. Okay, so we may enumerate the functions of controller as follows: designing and operating the accounting system, preparing financial statements and reports, maintaining systems and procedures, supervising computer applications, preparing budgets, making forecasts and analytical reports, handling tax matters. These are very difficult to remember and write in the answer. If you listen and if you study once and if you remember the words once or twice, you can write in your own sentences using these words. Whatever you want to write, you just put these words in between and write. Like, say, for example, overseeing cost control, preparing budgets, an accountant, an external auditor does oversees the cost control, prepares the budgets. Like you can write in your own words, in your own sentences. Okay, I need not tell now. Okay, let's see the next personnel. Treasurer. He is a custodian and manager of the cash and near cash resources of the firm. He who handles cash is a treasurer. Okay, so these are the different activities of a controllership and treasuryship. Okay, this is self-explanatory. You can read. A finance officer. Finance is the lifeblood of business. Underline this point and write in your answer sheet wherever a question on finance comes. Finance is the lifeblood of business. Financial management includes three major decisions: investment decision, financing decision, and dividend decision. The second part, investment decision is perhaps the most important decision because it involves allocation of resources. It is concerned with future, which being uncertain involves risk. Investment decision is nothing but where do a company invest, in which project company invests their money, what projects they are going to take, that is called the investment decision. Financing, actually the first part is financing decision, the second part is investment decision. Once the finances are available, then only they can invest in a project. Financing decision is concerned with determining the optimum financing mix or capital structure. It examines the various methods by which a firm obtains short-term and long-term finances through various alternative sources. Okay, this is okay. The sentences are academic in nature. The summary is: financing decision means obtaining finances in an optimum manner. There should be a balance of short-term finances and long-term finances. Short-term and fun. Okay. Financing decision is concerned. Okay, it's an optimum financing mix. Right. The next part is dividend decision. The dividend decision is concerned with question like how much of the profit is to be retained and how much is to be distributed as dividends. Once the project is completed, we estimate the revenues, estimate the profit, and how much is to be shared with the shareholders. The finance manager has to strike a balance between the current needs of the enterprise for cash and the needs of the shareholders for an adequate return, balancing between the working capital and the dividends. These are all the. So what we have read is uh, roles and activities of an accountant in an organization: chief accountant, controller, finance manager, internal auditor. You will see, let us see 3 points for each one. Accountant. If we have to point five, if we have to write 5 points about an accountant, first one is he is a conscience keeper. He aids the management control. He prepares financial statements. Next, what? Uh, he verifies and authenticates, cross checks the entries. He does the bookkeeping job and also the auditing job. Okay, these are the 5 activities an accountant does in a company. Chief accountant is the head of the accounting. There are different kinds of accounting systems like tax accounting, financial accounting, management accounting, and various other kinds of accounting. So he's head of all these kinds of accountings. He reports to the executive director of accountant. Some other points you can write. Controller. We have seen, no? Who is a controller here? Controller. Yes, here it is. Controllership. He does the planning. He does the reporting. He does evaluating, tax administration, reporting to government, protection of assets, economic appraisal. Okay. If you do not know what to write, remember these big words: appraisal, government reporting, tax administration, reporting, interpretation, planning, controlling. Okay, all these things you can write. You'll get 1 or 2 points. Finance manager. He who brings finance is a finance manager. Finances has to be brought in an optimal mix, balancing the short term and also the long term. Okay, financing decision is a major source of money for the company. Internal auditor. Other points you can write. Internal auditor, he maintains control over the activities of the bookkeeping. Not maintains control, I'm sorry. He checks the he verifies the entries, day-to-day entries, whether they are in accordance with the accounting principles or not, whether the budgets are maintained or not, whether the cost, how much is the cost, whether the budgets are exceeded or not. All these things will be cross-checked by the internal auditor. Okay, the last part, I think. Nature of accounting function. The role of the accountant is advisory in character, means he gives advices. He works through the authority of the chief executive. The accounts or finance department do not exercise direct authority over line departments. Okay, it's very direct. Understand this. Organization for accounting and finance. What is this organization? Okay, you can see this chart. You will understand. Any organization, the chief of the accounting is called the director finance. Under him there will be general manager finance, and there will be deputy general managers like DGM accounts, DGM finance, DGM internal audit, DGM systems and data processing. And under them there will be senior managers accounting, senior manager finance, procurement, tax planning, tax accounting, management audit, cost audit. Okay, this is the structure of uh, accountants in a company. Okay, now finally we have reached the summary. Okay, accounting is an important service activity in business and is concerned with collecting, recording, evaluating and communicating the results of the past events. You have to use these words exactly in your answers: collecting, recording, evaluating and communicating, reporting the results of the past events. The history of accounting development reflects its changing role in response to the changing business and social needs. As the needs are changed in the society and economy, accounting is also changed accordingly. With the emergence of management accounting, the focus of accounting has been shifting from mere recording of transactions to that of aiding the management decisions. This is also a part of the role of accountant who aids the control of the management decisions. Accounting can be perceived as an information system, okay, which has 3 parts: inputs, processing and outputs. The usefulness of accounting lies in its capacity to provide information to various stakeholders in business so that they could arrive at the correct decision. Okay. The next, the organizational setting for accounting and finance function may also vary in different organizations depending upon their peculiarities, nature and size of business, technology and structural form. The helm of affairs is usually the director of accounts and finance, who is a member of the board of directors. Okay, this is all a common thing. These are the keywords in reporting, planning, control. Self-assessment questions or exercises. In the final examination, in the term and examinations, almost 100% only these questions will come. Okay, so once you read the chapter, once you underline the main points, once you remember the bullet points, we can easily write the answers. Most of the times we cannot write what is given in the textbook. We have to write in our own words, but here and there in between our answers we must use the correct terminology. That is why it is important to underline and remember the bullet points. Okay, the first one is financial accounting is an extension of stewardship accounting. Comment. Okay, we can simply write this. Stewardship accounting was in the olden days where rich people employed stewards. They helped in maintaining their books of accounts, day-to-day transactions. From this emerged the bookkeeping process, and there the double entry bookkeeping system has emerged. As the days passed in the history, joint stock companies, limited liability companies, and big companies have emerged, and people are interested in investing their money in such companies, and they wanted to know the information about the company, to the profitability of the company. Therefore, financial accounting has emerged. Hence, financial accounting is an extension of the stewardship accounting. Okay, it is very simple. What new developments in accounting have taken place over the past 20 to 25 years? We can write like a social. Where is this? Uh, Sorry, skipped. Okay. What new developments in accounting have taken place over the past 20 to 25 years? If you see the evolution of accounting, the latest one is inflation accounting, social responsibility accounting, human resource accounting. We can write about these three accountings. These are the changes taken place. Human resource accounting, it is mostly looking at it is mostly looking at the company from the point of view of the human resource. How much investment has been done for recruiting the people, for their replacement, for their training. So that is one angle of the accounting. Developments in accounting. And social responsibility accounting, how corporate social responsibility concept called corporate social responsibility has come, and how Indian government has made it mandatory for every company with a turnover of a certain limit has to compulsory invest in corporate social responsibility, and the percentage is already fixed. You can read all these general knowledge topics also. Okay, inflation accounting, evaluating the value of the assets at the current prices. Okay, next, state the group of persons having an interest in business organization and examine the nature of their information needs. Okay, who are all the stakeholders interested in the business organizations? They are like shareholders who invest their money in the company. They are interested. Management is interested because they have to exercise control. They have to run the business. They are interested. Employees interested because they wanted. They expect hike in their salaries, and so therefore they wanted to know the information about the company. Creditors, they give money for the short term. The creditors, they give money, they lend their money to the company either short term or long term. They are majorly interested about the liquidity of the company, how fast the company can repay their uh, dues. Okay, and some many other people are also there. The government is also interested. Regulatory bodies are interested. Okay, you can write. Discuss the role of accountants in modern business organization. This is very simple. We have to, for these questions, there are certain terms used in the book, like conscience keeper, aids management control, prepares information, income statement and balance sheet. One must write these. One must compulsorily write these activities, these roles, to score more marks in the examination. Without writing these roles, you cannot uh, get good marks. Okay, these are the main roles of an accountant. Okay, it was defined, is given earlier in the chapter. You see once. Differentiate between recordative, interpretative, and auditive functions of accounting. Recordative means recording. It is mostly concerned with recording events which have already happened. Interpretative means whether they are interpreting information from the uh, recorded events, like whether the total expenses exceeded the budget or not. Hmm? Next, interpreting the future trends, interpreting or analyzing about mergers or takeovers from all the information, all these things. Auditive functions, whether the data which is recorded is correct as per the accounting standards or not. That is auditing function. Yeah, you can write. How can accounting reports prepared on a historical basis after the close of a period be useful to managers in directing the activities of business? Are you boss? You can write whatever you wanted here. These are silly questions. You remember, so whenever a question is asked about managers or reports, you remember balance sheet, profit and loss account. Manager's role means planning, organization, decision making, uh, coordinating, controlling. Okay, using these words, you frame your own sentence. Okay, distinguish management accounting from financial accounting. This is very technical. Okay, management accounting is not technical, but financial accounting is technical. Financial accounting involves three kinds of accounting. It takes into view financing decision, investment decision, and dividend decision. Okay, from where the finances are to be procured and in where the finances are to be implemented, and how the results thereof are to be distributed with the shareholders. This entire spectrum is dealt by the financial accounting. Management accounting means it is all about the related to the management control, management planning, budgetary control, budget estimations, all those things. Okay, how does the accountant help in the planning and control process of a large commercial organization? Or you can write here, I need not explain. To have an accountant is a privilege of a joint stock company only. No, not necessarily. Any company can have an accountant. Ninth option A, false. A controller is entrusted with the responsibility of raising funds. No, it is the job of a finance manager. Yes, false. Management control differs from engineering control, since the latter is engineering control is fully automatic and forms, and the former is highly complex. Is the statement here? See, it's true. Okay. An accountant is the custodian of the properties and financial interests of a business enterprise. Absolutely true. Okay. This is the end of unit 1, accounting and its functions. This is very dry subject. Okay, you must definitely compulsorily remember bullet points, and there is no other way. You cannot write in pure general normal terms. You have to compulsorily use some terminologies which are given in this book. Only then will you score good marks. Okay, thanks for listening to the video, also watching. In the next video we will be doing unit number 2. Okay, see you then.